We have a question from someone that says, can you refinance a home equity loan into a mortgage? So, can you refinance a home equity loan into a mortgage? The answer is yes. And then the question is, should you? When should you? When shouldn't you? Pros, cons, etc. But I also want to clarify before we get into this that the question's not technically accurate from a mortgage side as far as what they're asking. And here's what I mean by that. A mortgage, a home equity loan is a mortgage. And so I think what they're asking is, can you refinance a home equity loan into a quote normal type mortgage? And so what I mean by that is a mortgage is any loan that exists that is then tied to with the house as the piece of collateral. So a note, like, hey, I owe somebody 100 grand. That's a note. Like I owe somebody that 100 grand. As soon as the collateral becomes my house, that if I don't pay, they get my house. That's what makes it a mortgage. A deed of trust kind of pulls that in. So different states have different terminology. So keep that in mind. So some might say mortgage, deed of trust, doesn't matter. So I'm going to say that the answer is yes. Can you refinance a home equity loan into a quote normal mortgage? You can. When should you? Why should you? Well, let's talk about that. So first of all, they are both mortgages, right? They're both liens against a house. A home equity means that somebody's actually tapping in to get cash out of their home, whether they get money in their bank account when they're done, or whether they use those funds to pay off things like maybe they pay off some debt, credit card debt, car loans, things like that, or maybe they take the cash and give it to a contractor. That can be done via a home improvement loan or a home equity loan. So those are all needs, like cash outs are usually need-based loans, like you need the cash to go do something with it. And so those a lot of good reasons to do that. As far as should you refinance it in back to a quote normal mortgage, certainly can. And I would say the numbers just need to make sense, right? So if you want to move it over to a normal mortgage, it's just a matter of let's figure out what the costs look like. It's like any other refinance at this point. Like figure out what is the current interest cost, right, on the current loan. What does that look like moving forward? And then what would it look like if you got a new loan? What interest would be saved? And maybe like PMI and things like that to come into play. So it's just making sure you have that answer so that you can then do a cost analysis that says if a homeowner is going to spend $4,000 in fees to make this mortgage get done, but the homeowner saves 2 grand in expenses. Now that doesn't mean on their monthly payment. I mean, like drill down and truly make sure that there's a real savings in interest and principal or P&I and things like that. Or not P&I, sorry, MIP, mortgage insurance. That's what we determine. So let's say that in this example, a homeowner is going to save $2,400 a year, $200 a month, $2,400 a year in expenses by refinancing. Well, if the costs are 4 grand, you've made your money back in less than 2 years. So at 2,400 after, I don't know how many months, 18 months, give or take. So, probably a little longer. So less than 2 years, because 2 years is going to have a $4,800 savings. And if you paid 4 grand to get it done, yes, it worked. It's worth it. So as far as the timing, it's just doing the math, working with a great mortgage lender like Mortgage Mark, right? Call our team to make sure we got a plan. So if and when rates do drop, sorry, or dip, when rates go down, that you can jump on that opportunity because when they go down, they don't always stay down. So it's a quick thing that you just got to look for, making sure that's done, make sure you're ready from a qualifying standpoint, make sure your credit's good where you want it to be. Because again, that's not something you can just fix overnight in most cases. So do just make sure you look at your financials, get all your paperwork ready. Like we got a lot of folks right now in this market where we got them just queued up so that the second rates go down and there's an opportunity, we can make sure we jump on that and get them ready to close. So get your financials ready. Make sure you got the best mortgage rate and mortgage structure for what you're doing in front of you, and get that application done and apply for that mortgage now, so that when rates do dip, you can do that. So again, is there pros and cons? It's just, again, it works out the numbers. If you can save the money and it works, absolutely. For potential drawbacks, be careful of bad actors. Anytime you're refinancing, a lot, and it's usually more the big companies with like call center type mentalities because these folks don't know what they're doing, and that's not. I'm not dogging on them, but the reality is these are jobs for them, not a career. The Mortgage Mark team, this is our career. I've been doing this since 2003, so understand that the biggest concern or the drawback to be aware of or pitfall is like, oh, you're going to save X dollars a month. Well, make sure that's not just cash flow, like your payment. Like if you go from a payment of here to here, if that's not your primary goal, like if you save $300 a month, but you may be paying more interest if you're resetting the clock to 30 years. So just be careful. It's structured the right way. You have all the right questions. You're talking to the right professionals, and just make sure you truly know what the savings are, not just the cash flow each month and the payment piece, but the actual savings. So that hopefully answers the question of can you refinance an equity loan into a mortgage? Yes. Like I said, that kind of just makes me feel weird because that's technically not the right verbiage, but we're going to answer the question. If you need anything, reach out to the Mortgage Mark team. We're here to help. And as always, when you think mortgage, think Mark.